Welcome to the SPY Income and Growth Strategy for Retirement. Are you looking for a simple, repeatable way to build long-term wealth and generate consistent income without constantly watching the market? This course will teach you a proven, disciplined strategy combining two powerful tools: $1 cost averaging, DCA to the S&P 500, via SPY. 2 selling out of the money covered calls for steady income. Whether you're planning for retirement, already retired, or just want to grow your wealth with less stress, this course gives you everything you need, including checklists, rules, examples, and risk management plans. No guessing. No hype. Just a step-by-step system built for decades of reliable growth and income. Let's get started building the retirement portfolio you can count on. Note, this is not a financial advice but education course only. Do you know research before investing? Learning objectives. By the end of this module, students will understand what SPY is and why it's a foundational asset for long-term investing. Recognize the historical performance and risk profile of SPY. Learn why SPY is ideal for retirement accounts. See how SPY integrates with a covered call strategy. Section 1.1. What is SPY? Key concepts. SPY equals SPDR S&P 500 ETF Trust, one of the oldest and most traded ETFs in the world. Tracks the S&P 500 index, representing 500 of the largest US companies. Offers instant diversification across sectors like tech, healthcare, finance, etc. Launched in 1993 by State Street Global Advisors. Why it matters: you don't need to pick individual stocks. SPY is the market. SPY is liquid, meaning low spreads and high volume, ideal for trading options. Section 1.2. Historical performance of SPY. Key stats. Approximate as of 2025, annualized return since inception, 10%, nominal. Dividend yield, 1.3%, paid quarterly. Expense ratio, 0.09%, very low. Historical returns, timeframe CAGR, approx. Notes: 10 years 11% bull market post 2015, 20 years 9% includes 2008 crash, 30 years 10% includes .com and GFC. Lesson insight: with dividends reinvested, $10,000 invested in 1993 would be worth over $120,000 by 2025. Section 1.3. SPY as a retirement investment. Benefits: broad diversification across US economy. Low fees, high transparency. Strong liquidity and option market, ideal for income strategies. Suitable for tax-advantaged accounts, Roth IRA, TFSA, 401k, RRSP. Safe and passive, no stock picking stress, automatically rebalanced by index rules, built for set-it-and-forget-it investors. Section 1.4. SPY and covered calls, why it works? Covered call compatibility. SPY has weekly and monthly options, with tight bid-ask spreads. Volatility is moderate, stable premiums. Because SPY doesn't explode in price like growth stocks, OTM covered calls have low assignment risk. Example: SPY trades at $500, you sell a 45-day OTM covered call at $520 for $2.50. If SPY stays below $520, keep the premium. If SPY rises above $520, called away with gains plus premium. Section 1.5. Lesson summary, concept takeaway. What is SPY? A low-cost ETF that tracks the US stock market. Why use SPY for retirement? Long-term growth, low cost, diversified. Why SPY for options? Liquid, steady, ideal for covered calls. Section 1.6. Assignment, SPY return simulation. Instructions: go to portfoliovisualizer.com. Input the following: portfolio, 100% SPY, time period, 1993 to 2025, reinvest dividends, yes, contributions, $500 per month, DCA, analyze the ending value, drawdowns, and CAGR. Expected outcome: students will see that consistent DCA into SPY over decades produces strong long-term results even through crashes. Section 1.7. Quiz. Optional. Question 1. What index does SPY track? A. Nasdaq 100. B. Russell 2000. C. S&P 500, white tick mark emoji. D. Dow Jones. Question 2. What makes SPY a good ETF for covered calls? A. It has high implied volatility. B. It has tight option spreads and steady price action, white tick mark emoji. C. It pays monthly dividends. D. It tracks bonds. Thanks for watching. For similar content, please like, share and subscribe. See you in the next module.